Hello everyone, welcome to my channel. In this video, we are going to discuss about the latest IPO which is starting the September 21st, CAMS, Computer Age Management Services, which is it is the market leader and India's biggest registrar and transfer agent. I am Varun Agarwal, and if you have not subscribed to my channel, please do subscribe right now and consider joining the YouTube community because there we are discussing lot of stock specific ideas and analysis. Let's get started. Computer Age Management Services, this company was incorporated in 1988 and it is India's largest registrar and transfer agent of mutual funds. It dominates the market with a 70% market share and 4 out of the top 5 mutual funds are their clients. Total 16 mutual funds are their clients with the mutual fund accounts of account holders of 71.8 million. So you can understand that almost the entire market is being captured by this company. The promoter of this company is Great Terrain, and the company has 271 service centers across India in 25 states, and it has 4243 employees. So they have a huge base spread across India to render their services. Now, what is a registrar and transfer agent? I want to define here to make your understanding easier. Registrar or transfer agents are trusts or institutions that register and maintain. So these institutions or these companies, they register the mutual fund holders details with them and maintain that data, all the detailed records of the mutual funds and all the transactions which happen in the mutual funds of investors for the convenience of the mutual funds, because the mutual funds don't want to do these kind of tasks. They want to focus on managing the portfolio of their clients. So they outsource their services to a registrar and transfer agent, and the RTA manages the entire work for them. So what is the business model and what are the different types of services or business segments which this company offers services in? Electronic payment collection services, all the electronic payments and collections are facilitated by this company. They are also service providers to insurance companies. This also forms a major part of the business of this company. Alternative investment fund services, banking and non-banking services. Certain banking and non-banking services are also provided by them. KYC registration agency business. So the KYC verification and all those things are also done by them. And they also provide software solutions to mutual funds. They have a particular business segment where they develop in technology and softwares for the mutual funds to use and provide services to their clients. The out of their total revenue, 86.9, almost 87% of the revenue comes from the services which they render to mutual funds, and 13.1% comes from the other services. So the business model of this company is an asset light model because they don't require much of capital investment, and that is why they are able to save a lot of money and they are able to distribute a lot of dividend to their shareholders. So for those people who are looking at interesting dividend payouts, this company could be a good buy. Now let's understand the market. As you know, the market of the mutual funds and this industry in India is growing. It is growing at a CAGR of about 13.4% in the last 10 years, which is a very good rate. As on July 2020, there are 41 fund houses in India, out of which we have discussed that 16 are already their clients. And India's mutual fund penetration is very low because very less people still invest in mutual funds in India, and there is a lot of scope of more penetration in this segment which will increase the market size of business of this company. What is a competitive advantage which this company has when compared to the others? As we know, this company dominates the market in this business. They have high-end technology. They comply with all the regulatory compliances. Since this segment has so many regulatory compliances, for a new company to enter this business is difficult. They have so many branches and a good network, and they are the biggest, so they have that operating cost advantage and they can leverage that to expand their businesses and provide cost effective services to their clients. They have vast knowledge and experience in the field in which they operate, and their clients obviously are long-term clients because they are the one of the best service providers in the industry. Who are the competitors of this company? KFin Technologies Limited, which was earlier called as Carvi. Sundaram PNB Paribas Fund, this was acquired by Carby. Franklin Templeton Asset Management. So there are a couple of competitors only in this field, and there are no listed companies which are their competitors. So this will be the only listed company in this industry when it gets listed. The market dominance we can see from the screen. CAMS holds about 70% market share compared to Carvi, which is about 27%. So you see there is a huge difference. And the third company is Sundaram, which is again acquired by Carvi, and the Franklin has a decreasing market share now at about 3% only. So you see that in spite of having a market dominance, they are going on increasing their market share. What could be the growth prospects? The market share, if you see, has grown in the last 5 years, which is a very good sign. The services which they render to their clients are comprehensive services. Whatever they need related to mutual funds and the other segments which they provide to, entire basket of services they provide to their clients, so they don't have to look for some other service provider. The market size, as we understand, is growing, so the company will grow. The market share in the existing market is also growing, so again there is a scope of growth. They are providing additional value added services to their existing and new clients, and individually they have different segments in their businesses. Individually also they are trying to become market leaders in each and every segment. What could be the risks in this particular company or the industry? The SEBI has lots of audit and regulations which they have to comply, and they can attract huge penalties if they don't comply. Revenue is dependent on the mutual funds performance. If the mutual funds don't perform well, their revenue is also going to get affected. The information technology has to be latest, data has to be very secured because the clients will not like it if there is any leakage. Their significant revenue comes from a selected client, so if they lose a major client or two clients, significantly the revenue might be impacted. There is less competition, but there is still competition if existing players grow or new players come into the market or international companies come into this business, and the government regulations will have a direct impact on the company's functioning. Now let's see the total income, the financials part. In the last 3 years, if you see, the total income is growing steadily from 658 crores to 712 and 721 crores in 2020. The profit after tax took a small dip in 2019, but it came out very well into 2020 to 173 crores, which is pretty decent. Earning per share again has gone up to 35.57, which is a very good number. And the promoters group is holding 43.5% stake. NSE, which is NSE Investments, which is a subsidiary of NSE National Stock Exchange, holds about 37.48% in this company, and SEBI has told NSE to remove the investment in this company. That is why they are going for an IPO to sell the stake of NSE Investments. HDFC and HDFC Bank are holding 5.99 and 3.33% stake in this company, which is again a good sign. The company has positive free cash flows, and the auditors are Brahmaya and Company, which is a well-known chartered accountant auditor. Now let's talk about the IPO details. The IPO opens on September 21st and closes on 23rd. IPO size is about 2242 crores. Price band is 1229 rupees to 1230, and the lot size is 12 shares. If you buy one lot at the higher band, you will be spending about 14,760 rupees, and maximum you can buy 156 shares, which will cost you about 1,91,880. The face value is 10 rupees, PE is 34.57. Now you may consider this PE is high, but since the company is the market leader, the PE is considered to be reasonable, and the business model is also an asset light model. That is why it's considered to be reasonable. Allotment will be done on September 28th, and the shares will be listed on BSE on October 1st. What are the objectives of the IPO? As we have discussed, NSE Investments is going to sell their stake. That is the primary objective, and they want to become a publicly listed company for a better branding, better liquidity of shares among their shareholders. So the company will not get money from this IPO. The entire money of the IPO proceeds will go to NSE Investments. So overall, it's a good IPO. I personally feel that you should go for it. The promoters are very much experienced. They are having latest technologies, market dominance, a good brand value, good financial performance. Sector wise, they are the leaders, and hopefully from anchor investors which are going to invest very soon, there will be good investments. And from the listing gains perspective as well as long term perspective, I feel that this IPO should be subscribed. So thank you for watching this video. I hope you like it. Do comment the names of your favorite companies in the comments below, on which I'll make the videos. Do consider joining my channel where we discuss a lot of stock specific interesting analysis. Subscribe it, hit the bell icon. Thank you for watching and have a great day.